Thanks for coming to our site and watching this video. And if you are watching this video at the moment, you're likely not here by chance and you are seeking information on bad credit mortgages. So Amin and I put together this video, which will answer a lot of your questions. But keep in mind, even after watching this video, not all of your questions will be answered. Bad credit mortgages are very case specific. So what we welcome and encourage you to do is give us a call and run your scenario by us so that we can give you the most accurate responses possible.
Yeah, that's right. And right off the bat, I just want to address the elephant in the room, which is bad credit and bad credit mortgages. If that's the case in your personal circumstances, don't feel embarrassed, which is usually the common sentiment that most clients feel. But just something that you might not know is, 1 in 3 of your neighbors probably are in a similar situation, and the only difference is you just don't know about it. But enough of that. Let's jump right into what is a bad credit mortgage, and I'll let Neil address that.
Yeah, so I guess the major question really is what is bad credit? And so bad credit is generally anything below 600. And even 600 to 650 is kind of on the lower side of things, and there's likely a reason why that is. So, it's possible that anything below 650 could fall into the category of bad credit, but generally speaking, it's anything below 600. And for bad credit mortgages, you can get a mortgage as long as your score is above a 500 in most cases. And if it is below 500, which is pretty rare, but let's just say for a second it is, there are still banks that are willing to consider it, except it will be on an exception basis, and they might scale back on the loan amount.
Yeah, and when it comes to income, another element that B lenders do allow more flexibility. They allow your income to go a little bit further than it would through the traditional banks. So whereas on the banking side, 44% is roughly the maximum your income can service all of your debts. On the alternative or B side, it can go up to 50, and in some cases even higher. But down payment, tell us about down payment or equity.
Yeah, down payment. So if you're purchasing, that's when down payment would be applicable. And to get access to bad credit mortgages, you need 20%. If you are refinancing, which doesn't involve a down payment, so to speak, essentially what you're doing is you're looking to either take out equity from your home or just switch over to another bank. The maximum that a bad credit mortgage lender can do is up to 80% of the property value. In some cases, up to 85%. But for the sake of this argument, for the sake of this conversation, let's just put the cap at 80.
Okay, and just talking on interest rate really quick, the real difference between the lowest rate you can find on the A space versus the B space is about 1%. Now that may seem like a huge difference or variant, but if you think about it from a payment perspective, it's not really all that far off, especially when it comes to amortization, which I'll let Neil explain in a moment, can help offset any payment increase that you might have. So from a cash flow perspective, you might not even feel a difference. And if it is, it's going to be very insignificant in the greater, when you consider all things, put into the application, the debt load, and so on. But Neil, tell us about the amortization.
And to help offset that higher interest rate, that amortization of 30 years really comes into play. So by having 20% down or already owning a home and just so actually the 20% doesn't apply in that scenario, you have access to 30-year amortization, which then helps lower that payment to make it more manageable for the 1 to 2, 3 years that you have that bad credit mortgage solution. So, shorter term solution again, but again, with that amortization, it helps bring that down despite the higher rate. And in some cases with some banks, you can actually get access to 35-year amortization, which is really rare now. And you definitely would never see that with your traditional banks. So in scenarios where you can actually qualify for 35, that could actually lower your payment to an amount, despite the higher rate, lower it to something even lower than what the traditional banks could give you.
Yeah, and so like as you're realizing, and as Neil mentioned at the beginning, there's a lot of gray area and flexibility in the B space through B lenders, and so your scenario may fit in a little bit more unique fashion, and certain questions that you might have in your head might not have been addressed in this particular video, but that's okay. That's just how it goes. So feel free to reach out to us anytime. We're here to answer those questions, add clarification, and help guide you to the right solution, wherever that may be.
Yeah, thanks for watching this video, guys. We look forward to hearing from you.